Hello friends, welcome to Financial Accounting with Prashant, your tutor in financial accounting. Have you ever sold your old books to a junior and made some money? Congratulations, you are doing the business. Do you know that selling lemonade in your neighborhood is also a business? Yes, even a small roadside tea stall is a business. Today we are starting right with the basics. Before you understand accounting, you must first understand what is a business. We will explore the meaning, types, and key features of business and why it is critical for financial accounting. Whether you are a student or a future business owner, this is where it all begins. A business is an economic activity where goods or services are exchanged for money with the aim of earning profit. In simple words, when someone makes or sells something to other people and they get money in return, the goal here is to earn money or make profit. So you always sell something for more than what you actually spend. It means you are doing business. Let us break this into parts and understand the meaning of each term used in the definition of business. The first term is economic activity. It means doing something to make money. If someone is working or making or selling something, or even if they are providing a service to earn money, then they are doing an economic activity. It's not a hobby. It's done with a purpose. And the purpose is to make money, make profit. The second term is goods or services. Goods simply means products like a computer, a phone, fruits, vegetables, groceries, electronics, electricals. These are all examples of products or goods. Services means selling or sharing your knowledge, your expertise, or your efforts. For example, a teacher teaches the students. He is sharing the knowledge. A plumber is fixing your toilet or the sink. He is selling his efforts. The goods are sold or the services are sold for what? In exchange for something. And that something is measured in terms of money. This is the reward for your efforts. It means you provide something and get something in turn. And that is, you get money in return. The last term used is profit motive. This is not charity. The objective here is to make money or make profit. Let us say a farmer grows vegetables and spends $100 to grow them. Then he will sell those vegetables in the market at a price which is greater than $100 because he needs to cover the amount he spent plus make some additional amount which is called as profit. Now let us move to types of business with some real life examples. The first one is trading business. A trading business is a type of business that purchases products from one place and they sell them to another place to earn profit. They don't make or produce anything on their own. They just buy it from one person and then they sell it to another person and they make their profit. For example, a supermarket. They purchase different products from different companies and different manufacturers and they sell them to the end users or the customers. They buy it from the suppliers at a lower price and sell it to the consumers for a higher price, and they make the profit. So this is trading business, where you buy and sell products. The second one is manufacturing business. Unlike a trading business, they don't purchase the ready-made products. They buy raw materials. They are not finished products. So they purchase raw materials, they work on them, they put efforts and convert those raw materials into finished goods. Then they sell those finished goods to the end users. For example, sugar is produced from sugar canes. So sugar canes are raw materials. The factory buys sugar canes from the farmers. They put the effort, they work on them, and they convert that sugar cane into sugar, which is the finished product. So sugar is the finished product, whereas sugar cane is the raw material. So this is called manufacturing business, where a person buys raw materials and converts them into finished products. Here also, he has to sell those finished products to the end users at a price which is higher than the total amount that he spent. The amount he paid to purchase the raw materials plus the amount he spent to convert that raw material into finished product. That is the total cost for him. Right? The last type of business is service business. It's a type of business that doesn't sell any products. They don't sell anything, but instead they provide services to the people. They do things for others and charge fees for their services. For example, a teacher gives tuitions. It is a service. A taxi driver takes people from one place to another. It is a service. A lawyer takes a case for his clients and defends them. It is a service. A developer builds a website for his clients, or he builds an application for his clients. It is a service. All these people provide services to others, and in return, they charge fees or they collect money from you. A service business also includes profession. A profession is a skilled service. People like doctors, lawyers, teachers, and accountants, they don't sell products. They use their knowledge to help others and they get paid for their services. For example, a doctor treats patients. It's a professional service. Lawyer gives legal advice to his clients. A chartered accountant helps you with the taxes and your accounts. This is also a service. These people are not selling any products. They are offering the expert help. That's why professions are part of service businesses. Now, the question arises, why is understanding business important in accounting? Everything in accounting, every principle, every rule, every concept is based on the assumption that a business is being carried out. If there is no business, there is no need for accounting. That's why it is important to understand the meaning of business, as it forms the foundation for all accounting concepts. Let's take an example. Mr. X starts a small cafe with $50,000. Every day he has to buy raw materials. He has to prepare and he has to sell items like coffee, snacks, and thereby he earns cash from his customers. To run the cafe, Mr. X needs to know how much money he is spending, how much money he is earning, whether by running this cafe he is making a profit or he is incurring a loss. Without keeping track of all this, Mr. X won't know how his business is doing. That's why he needs accounting to record all these activities and to understand the money flow, money inflow, money outflow. But remember, Mr. X needs accounting only because he has a business. If there is no business, there is no need for accounting. This is why accounting always starts with understanding business. So now you know, every time you see a shop, you see a company, or even a roadside seller, you know they are all doing the business. And where there is business, there is financial accounting. Let me give you a homework assignment. Think of any 3 businesses around you and identify which type they fall under, whether they are trading, they are manufacturing, or they are service. See you in our next class. Until then, it's goodbye and good luck.